Also with us, Hugh Johnson, Chairman and Chief Investment Officer at Johnson Illington, where he oversees $1.8 billion. Hugh says the market is experiencing a severe correction in what is an ongoing bull market, much like 1998. Hugh, let's start with you. How severe do you think we're going to see this thing go? I mean, 20%?
Oh, easily. You could get to 20% within days. It's not going to take a long time. Remember, 1998 was about 18%. That was long-term capital management. Was very severe. Obviously, it scared everybody. And quite frankly, 18%, it was a correction in a bull market. We didn't know it at the time, but that's what it turned out to be. So I'm hoping, when I say I'm hoping this is just a correction in a bull market, I'm saying I think that's what it's going to be, but I've got my fingers tightly crossed, believe me.
You know, Hugh, let me ask you, because Andrew's pointing out this is really kind of a technical trade. We're saying fundamentally, we had Ben Bernanke talking a lot about the economy today, the beige book, a lot of economic information. Fundamentally, does it make sense to you to see the declines that we're seeing on the equity side?
No, obviously it doesn't, because not only is he looking at the current economic numbers and say, the economy is improving, maybe at a slow pace, but it is improving, and it's likely to improve through 2011. So you don't get a recession or a bear market in a recession under those conditions. So I think basically the scenario that he's laid out says, quite frankly, that there's no place for a correction or a bear market. Now, I think we have to take into consideration that, look, the markets could be right and Bernanke wrong, and I could be wrong. This could be a bear market in anticipation of another turn down in the economy. I don't think so, but you have to at least entertain that possibility.
But, you know, I got to point out to you, Hugh, I've got a viewer writing in, Dean, who says, what about all those headwinds out there, whether it's Europe, whether it's concerns about the labor situation here in the U.S., whether it's concerns about our own deficit. I mean, Hugh, those are pretty strong headwinds.
Well, I think the biggest headwinds now are not our deficit, because you have to run deficits when you're in a difficult situation. But clearly, Europe is a headwind. Clearly, Europe is going to slow as a result of what's going on there, and that's going to some extent, impact the U.S. economy. Bernanke said that fairly clearly today. So I think that's probably the stiffest headwind right now. It's going to affect the U.S. economy. It'll shave some off of GDP growth, both in 2010 as well as 2011. But is it going to lead to the end of the cycle? A bear market followed by an economic recession, a double dip, whatever you call it. That's going a little bit too far, in my judgment. That's reaching a conclusion that I don't think the fundamentals really dictate.
Hey, Hugh, it's Julie here. Your optimism notwithstanding, you are still hedging a little bit, right? Because, that old saying, don't fight the tape. I mean, you are looking at the markets here and seeing this downward trend.
Yeah, Julie, one of the lessons I've learned from being at this for so long is the biggest mistake any investor, including myself, can make is to stay stubborn or stuck in your own view of the world and what's happening. You can't ignore the trends in the financial markets, and clearly the financial markets are saying you need to do something to build your defenses in your portfolio. What that might mean, particularly if you can't sleep at night, is reduce your exposure to stocks some, do something, and in the stock part of your portfolio, perhaps you can increase your weighting in some of the defensive sectors of the market, such as consumer staples and maybe utilities and healthcare. Move a little bit towards defense in response to the markets, because the markets may be right and I may be wrong and Bernanke may be wrong and the consensus among economists might be wrong.
We're going to leave it there. Hey, guys, thank you so much. Andrew Keen and Hugh Johnson joining us, walking us through the close on this Wednesday.